Hi, folks. This is Daniela Cambone, and welcome back to StansberryInvestor.com. Before we start today's segment, though, I want to just share with you a report that Stansberry Research has put out that I highly recommend you check out. With most investors going about life investing and retirement planning as if nothing unusual has happened to our financial system, not realizing the repercussions of the 11 trillion that's been pumped into the US financial system in the past 18 months alone, it's particularly a good read at this moment in time. At least 4 billionaires have stated publicly that Americans aren't paying enough attention to this development. And now, a former Goldman Sachs banker says sooner than most people think, millions of Americans will potentially be pushed down out of the middle class, out of private retirement, and out of a decent life based on independence and privacy into a collectivist nightmare he calls financial lockdown. So find out how to protect yourself, your money, and your family with a free copy of his new report. In it, he'll show you the 4 steps he recommends you take immediately. You simply have to go to www.wakeupcall2021.com to get a free copy of this report. Again, it's www.wakeupcall2021.com. Get your free report today. It's a great read. All right, that said, welcome back to StansberryInvestor.com, and please help me welcome my guest today, Will Rhind, CEO over at Graniteshares. Will, always good to see you.
Likewise, good to see you too, Daniela.
Absolutely. Well, look, inflation has been the topic du jour for quite some time, so I'm interested to get your thoughts because you've been identifying key problems in the economy that shows this beast, inflation beast, as I call it, is not going away anytime soon. How do you see things, Will?
Yeah, that's right. It's definitely the topic of the day, and it's something that I don't see really dissipating anytime soon, despite some of the relatively extraordinary actions that we've seen from the Biden administration just in the last few days to release barrels of oil from the Strategic Petroleum Reserve, in an effort to try and calm prices down. Particularly, we're seeing gasoline prices at the pump at record levels pre-Thanksgiving. We're seeing inflation at numbers that we haven't seen since the 1970s, kind of all across the economy, and it's manifesting itself in some of the highest increases for the traditional U.S. Thanksgiving dinner on record. So yes. This is a big issue.
Yes, we covered that last week, actually, how, like you said, it will be the most expensive Thanksgiving on record. I can vouch for that. I did my grocery shopping yesterday, shaking my head as I'm walking out thinking, wait, how much did I just pay for a carton of milk? So I personally think inflation is definitely here. But on that note, in fighting inflation, right, is the only real way here, though, Will, is either to raise rates, and the way we fought it in the 1970s leading up to 1980s, we had interest rates at 20%. We are nowhere near that level.
Yeah, we're nowhere near it. And what's happened since the last rate cycle, which obviously began, rate tightening cycle, which began in late 2015 and peaked in 2018, was that it took us 7.5 years to start raising rates from the lows of the financial crisis, and then we only peaked out at just over 2% before rates actually started to decline again in 2019, well before COVID. So since COVID, or since that particular rate cycle, we've added somewhere in the region of $7.5 trillion worth of debt to the balance sheet. And so this time around, it makes it almost more difficult to raise rates, even though we have inflation at such a high level. So as we all know, the Fed's tapering. So that tapering at the moment scheduled to last until June, July of next year before they start thinking about a rate hike. But it's just going to be incredibly difficult to raise rates in this environment where we have very high inflation, but against a backdrop of record high debt levels.
The only way to really fight it is to shrink the balance sheet, shrink the money supply. But the Fed hasn't even hinted at that.
No, exactly. I mean, the only other thing that could happen is, as they say, the best cure for high prices is high prices. And, with the news that we saw in the last few days about Austria going into another national lockdown, rumors of other European countries, but obviously particularly Germany talking about it. That was really the first time that I think we saw some semblance of the threat of demand destruction, and oil prices sold off on the back of that news. But I think absent of demand destruction coming from either a lockdown or more COVID lockdowns, or just outright substitution, in other words, consumers just bulking at the prices that they're seeing in the grocery store or at the pump and not buying, it's difficult to see where those price declines are going to come from.
Finally, Will, I know we've spoken about gold in the past. It's been said it is the ultimate inflation hedge. The question to you is, when will we start acting as such? When will it start moving again?
Well, it's a great question. We had a great move basically over the last few weeks, up until really the last couple of days, particularly on the confirmation that Fed Chairman Powell would be staying around for another term. And so bizarrely enough, the market has interpreted that as more hawkish than I guess the other potential appointment for the Fed chair. But leaving that aside, I think that the sell-off that we've seen was more technical in nature because there was such a strong move to the upside. And so I think that was more, so speculators taking profits at this stage than anything kind of more fundamental. But look, again, coming back to the inflation story, that this is something that the longer this goes on, the more of a problem it creates. I mean, look at what's happening in the bond market. We have record low real yields, so after inflation yields, the highest yielding categories, in the fixed income market, namely junk bonds, at negative real yields. So where do people go? And how do people hedge themselves, protect themselves against the ravages of inflation? And the longer this goes on, I mean, obviously at the moment you have, the stock market, despite the wobble over the last couple of days, is still at record highs. And so there is an environment right now where we are living with record high stock markets and record high inflation. However, it can't go on forever. And once the market acknowledges, or when the market acknowledges that there's a problem with inflation, there won't be many places to hide. And gold certainly is one of them. I don't think, as we've seen, I don't think we're there yet. But clearly, if we get to that point, there aren't many places to go.
Where do people go? That is the most excellent question, Will Rhind. Let me end it with this. You said, if the problem keeps getting bigger, I guess my question is, what is the greatest danger for you if the inflation wagon is not stopped?
Well, I mean, the danger is just what happened, in the last time around that we had, record high inflation, which is ultimately, it impacts the economy and the economy goes into a recession. And at the moment, companies are fighting tooth and nail to be able to raise prices and pass these inflationary costs on to consumers. Consumers at the moment, by and large, are paying these prices. And so it's working for the time being, but the longer it goes on, the dam has to break at some point. And if companies can't, grow their earnings on the back of inflationary pressures, then that will be reflected in stock prices, and ultimately, that will lead to a broader economic problem.
Will Rhind, I always appreciate your thoughts. Thank you so much for joining us here on StansberryInvestor.com.
Thank you so much. Thank you for having me again.
We'll see you soon. And thank you all for watching. And don't forget, for premier content you can't get anywhere else, sign up at danielacambone.com. That's it for me. Thanks for watching.